So we have a huge correction today in the precious metals sector. Silver's down over 8%, gold down 7%, platinum around 8% as of this recording. And so you have to ask yourself, is this some kind of watershed moment in precious metals, or did you just let your phone ring?
Well, I'll tell you that my phone's been ringing off the hook. It's almost melted today. In fact, I probably should charge it up because we have...
Is it because people are buying?
Yes, that's right. We have a lot of clients who have been waiting for a pullback, feeling like especially those who have been buying for years, know that, and I know when the market has a down day, I'll hear from specific individuals who always are value conscious and they're looking to add on pullbacks. But go ahead.
So you have to evaluate, is this a trenchant watershed moment, an epiphany in the precious metals market? Is the bull market over, or is it just a healthy pullback? And nobody knows for sure at this moment. God only knows, and I'm certainly not him. But I will tell you this, what has really changed? And the answer is nothing. We had a secular bull market in precious metals that went vertical. It just went linear. And in my opinion, at this juncture, this moment, it's a healthy, necessary pullback in the bull market, precious metals. Because look, I mean, here's the facts. The Fed is panicking now. They're actually in panic mode. They're not panicking to raise interest rates. They're now going to actually accelerate the monetary debasement of the dollar because they're cutting interest rates. They're going to cut again next week, second time. This is before the new chair comes in May of 2026, who's going to cut rates even more aggressively. The Fed is ending quantitative tightening. As a matter of fact, I checked yesterday. I looked at the Fed's balance sheet. Quantitative tightening means you're actually shedding assets, so you're draining the balance sheet. The opposite is, since October 1st, the Fed's balance sheet has been increasing. So they're already in the process of quantitative easing, and I think that accelerates under the new Fed chair and it coming in 26. And then is China now selling gold to stockpile treasuries? Is Russia doing that? So, I mean, so there's nothing really changed. Has the United States paid off its debt or deficits? The deficit this year is the same as it was last year, despite all the revenue that we're taking in tariffs. It's the same number, $1.8 trillion. That's not my opinion. That's a fact. So, from the Congressional Budget Office. So, deficits are still dangerously high. Debt is over the top. We're monetizing debt at a faster rate. So, until one of those things changes, then I will say, well, maybe this is the end of the bull market in precious metals. As of right now, it's just a necessary sell-off that should be bought. Now, if it continues to erode, you're going to break some support here, and it might last longer. It might be a significant pullback. But at this moment, it's a very healthy correction. Does anybody invest looking at the CPI? I look at the rate of change of things. Actually, the second derivative is the most important thing to me. So it's the rate of change or the rate of change. And for me, it means that inflation is heading higher at a faster rate. So we're growing at 2.7% year over year now. This next print, whenever we get it, because the government's closed, we're going to get a print on Friday. And I think it's going to be 3.1%. That's higher than 2.7. So the rate of change is accelerating. And yet we see the Fed, for some unknown reason, is anxious and now panicked to cut interest rates, end QT, and re-enter QE. Even though we spent 4.5 years above their silly, ridiculous, derisive target of 2%, and we're 50% above 2%, heading further away from 2%, and they're cutting interest rates.
Yeah, that tells you there's something else going on. It's always like, watch the body language. Don't listen to listen to the words just to hear what the cover story is, but not to understand what the truth is. Watch the body language.
You won't hear this from the financial media. The reverse repo facility. This is basically the excess reserves from banks that they didn't need, and they parked it at the Fed. And that was used to buy treasuries to make sure we had quiescence in our bond market, even though we're an insolvent nation. That was $2.5 trillion in 2022. Well, today it's effectively zero. So the Fed knows that all of that excess liquidity that the banks had parked at the Fed is now gone. So they don't want another repo crisis like they had in 2019. We're on the the threshold, the doorstep of another one. So they're preemptively obviating the need for that aggressive rate cutting and to, spike the balance sheet by $1 trillion. They're trying to get ahead of that by now ending QT, lowering interest rates, and rebuilding the balance sheet. It's funny that the balance sheet was $700 billion prior to the global financial crisis. It spiked to $9 trillion. They managed to get it down all the way to $6.3 trillion. From $700 billion to $6.3 trillion, And the reserves in the system were almost negligible, almost zero, and they spiked through. As a matter of fact, I'm going to put on my web, as part of my midweek reality check this week, I'm going to put a chart up of reserves in the financial system and show how they spiked from like zero to over $3 trillion since the global financial crisis, and then really went ballistic after COVID. And there's still, a superfluous amount of reserves in the system, and yet now they're adding those reserves. So you want to understand why people are pining for an alternative to the US dollar, and they're running into this like crazy stuff like Bitcoin. But in reality, what they need is gold and silver and platinum. And that's what's happening. So that's why I think, again, as of now, it's just a healthy pullback in the precious metals complex, which if you have the courage to step in when silver's down 8%, you might be rewarded a few weeks from now.
You mentioned this repo crisis that was happening a few Septembers ago, where the overnight rates went up to shot up to 10%, and all of a sudden the floodgates opened and there were unlimited windows of credit lines available and so on to the banks to help paper over this interbank distrust crisis. And now, just as of last Friday, there's a new amount that has just been released, and the fund reminding everybody that, hey, we got $500 billion or $500 billion sitting there ready and waiting for repo liquidity. Can you underscore how significant it is to hear that message being repeated at a time when we're also being told by officials, strong economy, things are good, etc.?
So inflation's been above the Fed's target for 4.5 years. We've got record asset prices in stocks. We have a huge, tremendous housing bubble, a massive bubble in credit, and yet the Fed is preparing to dump, helicopter money along with the Treasury. In fact, the Treasury is talking about, along with the administration, another round of helicopter money, another stimulus check for $2,000 worth of, America coin, whatever, in cryptocurrencies. This is lunacy beyond belief. And of course, people are looking and seeking shelter in precious metals, and they should, because we are an insolvent nation. And the only thing that's I will say this, the only thing that's going to end this bubble is going to be a combination of, yes, we are insolvent, we know that, but you need also insolvency and inflation to run intractable. I think that's what's going to occur. We're going to set ourselves up for intractable and protracted stagflation, which is going to lead to a bond market crisis. So in other words, you're going to have panic selling in the Treasury complex, not just because of a repo crisis, because there's no liquidity, because they're going to supply liquidity, as we just talked about. But then the liquidity is coming on top of an inflation problem, and you can't solve an inflation problem by creating more inflation. So there's a very high probability that you're going to see a bond market crisis that is not engendered by liquidity, but engendered by insolvency and inflation. And then that's the cue for me to get the heck out of harm's way. I mean, just go and short the market, go into cash, go into T-bills, and go in and short the market, because there's nothing the government can do. Dunagun, what does the government do when there's a crisis? In the past, this nation has done two things. They've printed a ton of money, and the Fed has monetized that money to send to people, send to banks or send directly to individuals. But when your problem is already inflation, you're only going to exacerbate that inflationary problem. So there is no solution from government. The only solution is to reset the currency and to default on debt. And that comes after hyperinflation, which is also a very real, unfortunately and incredibly, it's a very real possibility in this nation.